Welcome back, investors, to Ticker Time News. I am Adam, and the stock market today opened with a sell-off mentality for the quarter-end rebalancing today, with each of the major indices setting session lows around 10 a.m. And the major indices also, they kind of reach resistance about 2 p.m. this afternoon. And there's a very specific reason for why. We'll talk about that in just a moment. The price action early on. Let's go to the 15-minute chart for the S&P 500. We'll look at that first today. And remember, you can do this right at home with us. There is a link in the description of this video to TradingView. Click on the link, sign up, free account, doesn't cost a penny, and you can do this as well. Okay, going to the 15-minute chart. If we look here today, there was a big dip. The candle is what you see. Each one is 15 minutes. Big dip, gap down this morning. That's the first thing I'm going to point out. This morning, big gap down. All of your major hedge funds who were doing their month-end rebalancing, their second quarter-end rebalancing, and the first half of the year rebalancing, were all trying to sell first, right? That's why we gapped down. And we continued to gap down we continued to move down after the open, and then we hit our bottom right about 10 a.m. Eastern time. And then we started to move up. And I kind of thought myself that maybe this would be a turnaround and we'd actually end a little bit in the green today. But no, I was wrong about that one. Once we reached our high about 12:30, between 12:30 Eastern and about 2 o'clock Eastern, we maxed out. We hit our highs of the day, and then we sold off. And there was some news about Meta platforms that really put more jitters into the market today to cause it to go down. And one thing else to point out here about today's highs. Today's highs were about yesterday's median price action on the S&P 500. I found that to be interesting. That means that this is really a bearish setup, and to expect a rally tomorrow, I'm not sure if we can get it or not. Everything is just setting up to be really bearish right now. And growth concerns, they are just all over the place. It seems like there's more growth concerns that pop up every single day. And I've got a few that I want to go through that happened just this morning. One other thing to point out real quick before we go deep on this is the volume today. It was a little bit heavier than normal or average volume, and that would be expected, right? With all the major hedge funds doing their rebalancing of their portfolios today, that's why we got a little bit higher than average volume. But still, if you look at today's candle, I mean, you can barely see it. It's like there is no candle. It is only wick that you can see. Let me take volume off the screen for a minute. And then we're going to scroll in here a little bit tighter so you can see today's candle. And actually, I'm going to hide this for just a moment. Can you see today's candle? It's right here. It's right there. There is no candle. It is just a wick. How often do you see that in the market on a chart? Rare. It is very, very rare. I mean, we have to go back to May the 24th, but we can still make out a little red line right there, right? So that's interesting to me that price action ended up being so flat like that. If we look at that very flat candle on May the 24th, we did rally after that. So it's interesting, right? We got to say that. It's at least very interesting. And if we go back and continue to look, it's very rare to find a candle so narrow. Maybe right here on April the 27th, I could say that this would be a candle similar to today, except it had more of a wick on top, where today's candle, the wick on top and the wick on bottom, they're really pretty evenly displayed there, which has me wondering, the market seems to be pulling itself in two directions and it doesn't know where to go. It wants to move, but it's not sure it's safe to move, right? The market doesn't know if we should rally, if we should sell off. It is just a mess right now. and very, very choppy. In a market like this, it is better to sit on the sideline than to get scooped up and make a wrong call and lose it on the choppiness in this market. So right now, we're not really consolidating like we did. Let me highlight it right here in this area, right? We had clear resistance. We had clear support, right? That was a period of consolidation. That's also a period of contraction. Then after that, we had expansion when we sold off. Then this expansion, it didn't really lead to contraction. It just kind of led to expansion and then expansion, right? Where's the contraction? Usually, 9 times out of 10, when you have contraction, contraction leads to expansion, expansion leads to contraction, and contraction leads to expansion, and it just continues that cycle. We're not seeing it right now. So the market is just so confused on what it wants to do. It has no idea at all. Oh boy. So it makes it real tough to trade in this environment. So maybe the best thing to do is just to sit, be patient, wait for a clear chart pattern to start to develop, wait for some contraction, right? Or consolidation before starting to trade again. Maybe we just take a break tomorrow, right? And come back fresh on, I guess it would be Tuesday. Is this the holiday? Yeah, we'd be coming back on Tuesday. Monday, the market is closed because of the 4th of July holiday. So that's kind of a wrap up of the price action on the S&P 500 today. But what's driving this insanity in the market right now is something that I feel like I've been talking about it for weeks, if not months. Growth concerns. It's really that simple. Concerns about growth. We're not going to grow in the second half of this year. And companies are starting to realize that. And they're starting right now, they're starting to lower their expectations. But not a whole lot of companies are doing it. Only a handful. And here's just a couple of the growth concerns that bubbled up early on this morning before the market really even opened. What's happening? I'm glad to see you here. I actually did good. The puts I swung got 85% or more. Then more puts at 380. Awesome job. Great job. Awesome. Real good. Okay. Here's some of those growth concerns that popped up this morning. RH Incorporated. The ticker symbol is RH for the company. They lost nearly 10%. Last time I checked, it was about 10%, 10.5% on the day. They are up just slightly in the after hours, about 0.1%. But they cut their fiscal year net revenue outlook for the second time in a month. And what they're quoted as for why they're cutting their revenue is deteriorating macroeconomic environment. We know that. We know it's coming. We know it's happening. That's one. The second thing that happened today is China reported weaker than expected manufacturing PMI data for June. The third thing, Japan posted its weakest industrial production number since the onset of the pandemic. That's crazy. And number four, this has to do with the crypto market. Bitcoin is down 6.5%. Ethereum is down 7%. A big sell-off, again, in the crypto market. And quite frankly, crypto right here, Bitcoin, it is still within this range that I think it could potentially stay in. The bottom of this red box is 16,000. I think Bitcoin could fall that low. But falling cryptocurrency prices played into worries about reduced wealth effect. Bitcoin is sitting $18,800 right now. This fall comes on the heels of the SEC and their decision to reject Grayscale Bitcoin's application to turn its GBTC vehicle into an actual ETF. And then, of course, because of that decision, Grayscale has sued. I guess when you don't get your way, that's what you do. But Grayscale's, so it's GBTC is the ticker symbol, Grayscale Bitcoin Trust. It was a name very popular through 2020, 2021. Kathy Wood, ARK Invest, they bought into this. But you can see here, what is it? $12.06 a share. I can't believe that. Down 9.4% today. This thing, it moves along with Bitcoin. What were these highs up here? About $55.30 a share at the peak, and now it's down to $12 a share. It's just continuing to fall. But what they wanted to do was basically they're playing futures contracts in the options market. And what they want to do is they want to turn this into an actual ETF, a spot ETF. That means it's pegged directly to Bitcoin's price. The SEC rejected that for now. We'll see how that turns out. Now, on another note, in the same crypto universe here, there are reports that FTX, which is a very big crypto exchange, no sponsorship with them, they are close to potentially buying crypto lender BlockFi. And they're earlier, a few weeks ago, or maybe just a week ago, they issued a line of credit to BlockFi. But now it looks like they may be trying to buy BlockFi for about $25 million, or 99% less than its last private valuation, which means BlockFi could be bought for 1 penny on the dollar. That is quite a discount if FTX can get that. It's also rumored that FTX walked away from a similar deal with Celsius. After seeing how badly their finances are, FTX walked away from Celsius. Thank goodness they did, because Celsius is in some trouble. All right, so that's a quick wrap up with the Bitcoin cryptocurrency aspect of it. It's not looking so hot. The fifth thing today was Sweden Central Bank. They went with an aggressive 50 basis point rate hike in their key policy rate. The sixth thing that led into growth concerns, personal income and spending report for May showed a 0.4% decline in real personal spending and a still elevated 4.7% year-over-year increase in the core PCE price index. And that's what the Fed looks at the closest in determining what it's going to do with its own rate hike plans. So probably looking at another 75 basis point rate hike coming up in July. Now, the risk off sentiment this morning was showing up in the advanced decline line. Early on, decliners led advancers by a 6-to-1 margin at the New York Stock Exchange, and then by a 5-to-1 margin at the Nasdaq. That spread did narrow by the close, where decliners led advancers by about a 3-to-2 margin at both the New York Stock Exchange and Nasdaq. Now, mega cap stocks, they didn't help today either. The Vanguard Mega Cap Growth ETF, ticker symbol MGK, I look at it every day. You guys know this. They were down 1.3% last time I checked, and 1.3%. Let's scroll in here just a little bit tighter. Let me hide volume since it's down so close to it. If you look at this wick here, it looks very similar to the S&P 500. There's hardly a candle at all for the day. That's indecisiveness. Traders, investors are unsure where to go. Now, if you look at the mega cap down 1.3%, the S&P 500, it closed down 0.9%. So there's a big difference there. And then the Invesco S&P 500 equal weight ETF, ticker symbol RSP, well, it closed down about 0.6% the last time I checked. And yep, 0.6%. So you can see clearly there that the growth, the mega cap growth companies, they did not help the market today. And it was because they could not decide which way to go. Now, the initial turnaround in the market coincided with falling commodity prices and treasury yields, which were offshoots of the ongoing growth concerns that are wrapped up in worries about the Fed raising rates aggressively into a slowdown and risking a recession. Now, I think personally, we're already in a recession. So what's the risk? We're already there, right? We need to just take care of the inflation, let the market fall, and then let's move on, right? Let's start building again. Instead of this indecisiveness, not sure what to do, lost feeling in the market. This is just insane. This is not how a stock market should be acting. And we know stock markets overreact to everything they see, but when you look at a candle like today on the S&P 500 and it being so flat, a stock market should have some direction. The Fed is supposed to be leading us out of these problems that it seems like the Fed has created. So, Fed, let's get on it. Hike up those rates, let the market fall so we can start rebuilding. Oh boy. If they listen to me, that would be fabulous. But I highly doubt it. Highly, highly doubt it. All right, let's look at the 2-year US02Y. The 2-year today and the 10-year both settled down below 3%. The 2-year fell 14 basis points to 2.93%. It's up just a little bit in the after hours here. Then the 10-year, let me point out one thing right here. There seems to be a support line here, right about here, just shy of 3,000 or I'm sorry, 3%, or right around that 3% mark. So we'll see if it does drop down any further. But this right here is investors fleeing the stock market and trying to find safety in the bond market. It's as simple as that. And then if we look at the 10-year, the 10-year fell 12 basis points. US10Y for the 10-year. It fell down to 2.97 today, up a little bit in after hours, back above that 3% mark. Now, for the 10-year, it's held up at that 50-day moving average. So it's still moving in an upwards direction, even though it was down some. And then we had commodity futures. They also settled lower as well today. WTI crude, and we can look at that. US OIL on TradingView. Oil fell 3.7% to $105 a barrel. Natural gas futures fell 15.8% to $5.48 per British thermal unit. And then copper futures, they fell 1.9% to $3.71 a pound. Now, there is a theory out there that I want to share with you real quick. I don't usually talk about commodities and that angle in the market, but I do want to bring up this today. and it's the copper to gold ratio. Here it is. This is for the past 30 years, copper to gold ratio. Now, we are over here, right? We had this rally, a flat top, and now we're coming down. What's the significance of this copper to gold ratio? Well, I just want to read this one quick paragraph right here, and it will help you to understand. This is a leading indicator for economic growth. And if the market is full of growth concerns, it'll show up in the copper to gold ratio. So, real quick, this paragraph. Gold is the most widely recognized safe haven asset among investors. Therefore, during times of economic and geopolitical distress, it generally tends to perform well, making it a leading indicator of fear. Copper is the exact opposite to gold. Because it is a key industrial metal that is used globally in a wide range of industrial applications, it performs strongly when the global economy is firing on all cylinders. This makes it a leading indicator of global economic health and has led to it being commonly called Dr. Copper. The ratio prices copper in gold and represents the number of ounces of gold it takes to buy an ounce of copper. And you can look at this ratio right on TradingView. It's a leading indicator for economic growth. And right now, it is going down. And it's falling pretty quick, too. So I want to point that out to you. Add it to your studies if you want to of the market and different market theories. But the gold to copper ratio is one to pay attention to when we are heading into a time of economic slowdown or growth concerns like we are right now. Because this can also, on the flip side, when we are in that recession, when we're in that time of slowing economic growth, it can also be the leading indicator for, hey, things are starting to turn around. Things are starting to improve because this will start to head up. It will have bottomed, it will have turned around, and it will start going up again before the market really even realizes it. And just as an example, right here, this is 2008 right here. You can see this big drop. And then we get to the bottom of this, and that's January of 2009. And then we start improving throughout 2009. If we go back to the S&P 500 real quick, I just want to go to a weekly view and want to go back to that time frame of the end of 2008 to the beginning of 2009 on the chart to see what happened. It'll lag just a moment as I'm moving backwards, and here we are right here. The stock market reached the bottom at the beginning of March 2009, but yet the copper to gold ratio it hit its bottom and it started to move up at the end of January of 2009. So what do we get there? About a month and a week, a month and 2 weeks, leading indicator for when the market has hit a bottom. That's why I wanted to bring it to your attention, because it's crucial to watch. It can help us to find or know when the stock market is at a bottom. And since this is really just beginning to fall, we're nowhere near the bottom of the stock market yet. If this trend, if this leading indicator continues to perform as well as it has. So just a quick example, the 2008, 2009, when the copper to gold ratio bottomed and started moving higher versus when the stock market bottomed and started moving higher. So we have about a month and a half leading indicator for when the market is bottoming. So I'm going to be watching that copper to gold ratio very, very closely to figure out when we may be near a bottom. Okay, moving on from copper to gold. Let's get back here and open this chart up. As you guys know, I think with this yellow box here, the S&P 500 could be going to 3,300, 3,280, 3,285, somewhere in between there. Maybe by October, the end of October. We'll see. Maybe that's not even a long enough period of time. Maybe it'll take into 2023 before we hit a bottom. But it's something I'll keep an eye on and adjust my theory, my market theory, as we keep moving. All right, now the rebound effort today in the stock market, it lost its steam around 2 p.m. And we talked about some of the reasons why. But also at 2 p.m., Reuters, it reported about Meta platforms, META. There was an internal memo that Reuters said they saw. And they said that the company, Meta Platforms that is, expects slower growth. That's a theme, isn't it? In the second half of this year amid, quote, fierce headwinds. And that's exactly what we've been preaching since January, that the first half of this year was okay. The middle, the consumer's weakening, and so is the market. The end of this year, we're going to have the second phase of this bear market with an earnings bear market, and it's not going to be pretty. And that's what Facebook is saying too. Okay. Whew. All this negativity today. I don't like it. I want positivity. Always thinking positive. Much better than that. But Meta Platforms, yeah, it didn't do too bad today. It's still above this bottom green line here, so it's really just moving sideways right now. It's consolidating, or it's in that contraction phase before expanding again. So Meta Platforms down 1.6% today. Now, the only three sectors, let's talk about the S&P 500 sectors real quick. Let me pull them up. And remember, if you want this list, you can have it. I'll put it in the chat if you need it. It's mostly red, but there's a few little green spots in there. There were only three, 1, 2, 3 S&P 500 sectors that closed in the green. They were utilities up 1.1%, industrials up 0.33%, and real estate up 0.1%, almost flat, really, 0.04%. Now at the bottom in red were energy down 2%. Man, energy keeps falling, and I'm a little bit behind it, I think. But it is staying within this pattern right here of contraction and moving sideways after a mega expansion, going from the top of their trading channel, sinking right below the bottom of their trading channel, and down to this bottom support area here. Energy has just been rough, but it is moving a bit sideways right now. And then we have communication services. They were down 1.6%. Consumer discretionary down 1.5%. And information technology down 1.3%. Now for the quarter, the Dow Jones industrial average was down 11. Great if it was only 3. 11.3%. The Nasdaq composite, it was down 22.4% just for the quarter. And the S&P 500 was down 16.5%. That's pretty bad. As a matter of fact, this is the worst start of a year since 1970. I wasn't even born yet in 1970. That, I can't believe it. The worst start, the worst first half. Now, there's a chart circulating out there on the internet that does show different starts to different years, and then what the second half of the year brings. And the chart is actually pretty optimistic. I wish I had it here to show you guys, but I don't. But it does show that years that start bad, down 12, 13, 14%, actually do pretty good in the second half of the year. Unfortunately, I don't think this is your average bad start to a year. We have some real problems that we have to work through with earnings growth, and that'll be in the second half of the year. Now, with the economic data that we got today, we had the weekly initial claims for the week ending June the 25th, and it decreased by 2,000 to 231,000. The expectation was 234,000. While continuing claims for the week ending June 18th, it decreased by 3,000 to 1.328 million. The takeaway here is that the improving trend in initial claims has stalled. I've said it week after week now. I think for 2 weeks in a row, it has stalled, suggesting that there's just going to be more bad news than good news in future jobless claims reports. And that's one pillar of a recession, is unemployment numbers rising. And unfortunately, that's what we're going to start to see more and more and more of as companies remove their job openings, rescind offers, and unfortunately lay off their workers as well. Now, as I mentioned earlier in this live stream, personal income, it increased 0.5% month over month in May. The expectation was 0.5%, while personal spending rose 0.2% month over month. Expectation was 0.5% again. And then real PCE, that declined 0.4% month over month. Then the closely watched PCE price index was up 0.6% month over month, which left the year over year change at 6.3%. The core PCE index, which excludes food and energy, it increased 0.3% month over month, dropping the year over year change to 4.7% from 4.9% in April. Now, many will probably point out the moderation in the core PCE price index as the main takeaway. But knowing the Fed and knowing that the Fed focuses on this number, that's probably why. That is a fair conclusion. Although, one shouldn't overlook the decline in real PCE as another takeaway that will fuel concerns about the Fed continuing to tighten into a slowing economic environment. So we've got that. Now, it didn't move the markets today because it was practically in line. And some could see it as good, as I just mentioned. Others could use it as a fear tool. And that's what kept the market, I think, frozen. Didn't know which way to go. Now, we also got the June Chicago PMI that came in at 56, and the prior reading was 60.3. 50 and below, and you're no longer growing, you're contracting, just like a negative number. 50 and above, you're growing. Just obviously, the higher the number, the faster you're growing. Okay, looking ahead to Friday, tomorrow, what will we be looking for? The ISM Manufacturing Index comes out. The expectation is 55%. The prior reading was 56.1%. that drops at 10 a.m. Eastern. Additional economic data includes the IHS Market Manufacturing PMI final reading. The prior number was 52.4, and that comes out at 9:45 a.m. Eastern. All right. We've made it through everything I want to talk about today, and we did it in just about 35 minutes. That's pretty quick. Usually it takes about an hour. All right. If you have questions, now's the time to ask them. I'll go look at the indices, and I don't know if we can spot, really, quite honestly, what could happen tomorrow. I really think tomorrow is a flip of a coin, whether we're going to drop or we're going to continue moving sideways or go up. Quite frankly, if I had to make a bet, I would probably say we'll continue to move sideways, probably somewhere between 38.90 and 37.30. That's a big gap, I know. But the market is so undecisive right now. It just seems like they can't make up their mind which way to go. So that's why I think really tomorrow is a coin flip. I wish I had something more solid to say than a coin flip. It's basically, I don't know. And this is a tough one to try to predict. So be careful, be patient, and it's okay to sit on the sideline. You don't have to catch every move the market makes. Sometimes we just need to remind ourselves of that, and it's okay. All right, so Friday, rebalancing is done. We don't have to worry about that. That's behind us. There is on the S&P 500, and then I'll go to the SPY and Nasdaq and Qs. On the S&P 500, there is a gap that needs to be filled, and it is above us. So it is a likelihood, a good likelihood, that we could actually move up tomorrow. And let me just see, I want to measure real quick what this gap is. It's right here to right here. It's not a very big one. It's a 0.65% move to the upside. And it would basically put us right back into this falling wedge right here. Basically just put us right back and sit us on top of that falling wedge if we did come and fill this gap right here. Okay, that's a possibility for tomorrow, that the market, the S&P 500, could go up just a little bit to fill in that gap. Otherwise, going down, there's really no real gap to be filled here until we get super low, right? And then we could dip down and test a new low. But I don't think that's happening tomorrow. The market really, really wants to rally. That's why we were held basically flat today. All right, let's look at the SPY, SPY. While we're doing this, and if you're getting any questions you have, make sure to click that like button, share this video with a friend. Those two things really, really help out this a channel that's small in size like this one. Also, if you're new, click that subscribe. I can't even say the word. Click that subscribe button. There we go. That helps out greatly too. And if you like this perspective, you want more of it, trade setups, definitely click the first link in the description. Ton of information there. Okay, this gap here I would call filled. I should have took that off yesterday. Yesterday filled it, but there's a very, very tiny gap. Let's get the highlighter. It is between yesterday and today. It's a super tiny of a gap that could be filled right there. Again, moving in the upwards direction. I'd probably say 385 is probably max that we would go. Well, today's movement was 380 was the high, 372 was the low. If we got down to 372, I think we could head lower if we had rising volume, right? That could send us down. Rising volume moving up, that would be obviously a positive move. But the market right now, it's just so indecisive and it's so hard to predict. I'm being honest with you. This is one of those times where I'm not going to bullshit. I'm going to tell you the truth. It's hard to predict. So I could be completely wrong. All right. So there's not a lot of hope there. I know. All these growth concerns. I would not be going long in this market. I would be going short. I am writing it short, and I have been. I just don't know if we're going to get another bounce, right? If we look at the SPY here, you can see when we get these little rallies, right? Here's a 3-day one right there. We have a 2-day rally right here, but then we have a pretty flat candle and then another rally. But we had a reversal candle show up and we reversed and went down. So just looking at this right now, there are holes within candles, the gap ups, the gap downs, and it's just really negative right now. And I don't want to pull you along and try to tell you that it's all rosy and happy and yeah, we're going to the moon tomorrow, baby. No. All right. I'm sorry. I really don't have a lot of guidance today. It's just so darn tough. Here's the Nasdaq daily view. Again, pretty flat candle. There's some spacing there. I just think we're going to go lower. I mean, we could get a rally tomorrow. I know this isn't helping. I know. I know. This is awful. I shouldn't even... should I even be this negative? I just feel like right now, how could we have a rally? There are so many growth concerns out there that just keep popping up every day. There's more and more and more and more. How can the market rally with all of that negative news? And with companies that have they have not lowered their expectations for their earnings. And that is the second phase of this bear market, the earnings bear market. All right. Let me go to the 15-minute chart. Maybe I can see something. See, 15-minute chart. Look at the last. Look at that last candle, or the one right before the last candle. It looks like today's candle with a big wick up top, a big one on the bottom, and a small candle in between. Man, this market is just so indecisive. Okay. I apologize, ladies and gentlemen. I wish I had more positive or solid news, but right now, this market is just, there's no reason for it to rally right now. We're not getting anything positive to rally. Let's look at the QQQ. All right. Nearly identical. This is the 15-minute time frame. If you look here with the volume profile here, I mean, today, look at this. The green versus the red. I mean, we talked about the advanced decline line. You know, that's something that has to be in our favor to hit a bottom. And it's just not there. It looks like, you know, today, man, today was just one of those days where the market sold into strength. This rally that we had this morning after the gap down and fall, the market just sold into that strength. We couldn't break above yesterday's highs. That's a bearish sign. If you want a technical sign right here, this top that we made today, it did not break yesterday's highs. That's a bearish signal. That to me says the market's going lower tomorrow. That's what it says. And if we go back to the daily chart and we look at the RSI here, we're not even close to being on the bottom of this. We're at a 45. Is that right? We're at a 45.1. We're not oversold. The market's not oversold yet. So to me, this is looking like the only way to go is down. Yeah, I'm most likely not trading tomorrow. Everything is getting downgraded too. There are a ton of downgrades coming out left and right. Semiconductors getting hit hard. Solar's getting hit hard. It's just, I think the analysts are starting to wake up and realize that, you know what, this is not a good situation. Phase one of this bear market is complete. Now, phase two is going to revolve around the fundamentals of these different companies, and their growth is going to slow down tremendously. I mean, for some of these companies that had tremendous growth in 2020 and 2021, trying to cover those comps is going to be impossible. So when we see comps negative 50%, well, yeah, because 2020 and 2021 sales were so good, earnings were great. So those companies are going to have tough comps. But then in 2023, then we'll have better comps out there. You always get that. It's just like in the market when you have the expansion rallies or falls and then the contractions, consolidations. The comps work the same way. All right. Well, I really don't have anything else to add that's productive today. I wish I had more. It's just tomorrow, I just think shorting the market, doing your puts, I think will bear the biggest fruit. But there's just so much undecisiveness in the market right now that it's tough to even rely on what's right in front of you. You almost have to play it by ear. So maybe take a day off tomorrow from trading. Maybe we'll get some clarity, because, you know, something else that could have happened too is after today's rebalancing, a lot of the fund managers could have taken off. Maybe they're not even in the office tomorrow. Tomorrow could be a super low day of volume because since it's a holiday weekend and the market's closed on Monday, how many fund managers are just taking off on Friday and calling it a 4-day weekend? That's a possibility. So there's probably going to be a lot of volatility in the market tomorrow on low volume. which can give you wild swings up and down. So that's my call for tomorrow. Tomorrow, volatility, it's going to be up and down, no direction, and low volume, because the fund managers, they all went and took a long weekend, taking tomorrow off, and maybe that's the best thing to do. Skip trading tomorrow. We'll come back Tuesday and start trading again. Maybe we'll have some direction by then, and maybe the market can finally make up its mind on which direction it wants to go in. I think that's the game plan. I really do. Now, the crypto market, with Bitcoin being down, Ethereum is not down enough. I mean, it's right at $1,022 right now. Bitcoin in this space, if it can get down to $16,000, I'm a buyer. If it's in the $17,000 range, I'm a buyer again. But I'm buying and holding. I'm building up my quantity of Bitcoins, right? All right. Well, I'll see you guys tomorrow after the market close for another live stream. And we'll talk about what happened, why it happened, and what we can figure out. Where do you traders see downgrades? I'm always late to downgrades. Okay. Typically, if you want to get downgrades quickly, you usually have to pay for a service. I don't know of many free resources besides going to a newswire and possibly signing up there to get these calls. But if you sign up for a service, Seeking Alpha, for example, that's a great way to get ups and downs. I use a terminal, and that's where I get my information from. And it's all right there in the morning, all grouped together. It has all your upgrades, your downgrades, and your initial coverages. So I don't know of a free way, though, off the top of my head. I can check here real quick. All right, Market Watch. Let's see if it's a paid one or not. Wall Street Journal has their own. Market Watch has an upgrades and downgrades page, and it looks showing the top, showing the last 200. All right, here, I'm going to send you this link right here. This looks like a good free resource right here for upgrades, downgrades. All right, I'm going to put it in the live chat there. It's from Market Watch. And it gives you the date, the symbol, the company, ticker symbol, category, and the analyst firm. So if it came from, Jefferies or Truist, that looks like a good place to start right there. All right. Okay. All right. Well, we'll go ahead and wrap up the live stream for today, and I'll be back tomorrow for a wrap up. Investors on Patreon, watch the email inbox for our morning update and our weekend email that will come out tomorrow after the market closes, and of course anything that is big news economic data wise. And no, you're welcome. You're absolutely welcome. Yeah, so come join us over there if you would like to. Just click the first link in the description. Ton of information, and I will see you guys tomorrow. All right, have a good evening, and maybe take a break from trading tomorrow. We'll see. All right, have a good night. I'll see you tomorrow.